away from Star Ferro to Blue Star, then pull up that stock. We've got Vir Advani, Managing Director, joining in to talk about some of the prospects for the quarters ahead. Margins have come in at 6.3% and PAT is at 51 crores. Thanks for joining in on Hot Stocks. Vir, highlight for us what kind of challenges you faced in Q1, because both on your profit as well as your top line growth, it hasn't been as per expectations, much lower.
Hi, good morning. Thank you for talking to me. I just want to clarify that our Q1 numbers are actually much stronger than what show up in our reported results. I'll explain that in a couple of minutes. We have done a couple of restructurings in FY15 and FY16. Most recently, Blue Star Infotech, our IT group company, was merged into Blue Star Limited effective April 1, 2015. Because of that, the last year Q1, we've had consolidation of the IT business, which is no longer there in Q1 of FY17. As you know, we sold the IT business towards the end of FY16. So if I compare Q1 of this year with Q1 of last year on a like-to-like basis, revenue is up 29% to 1,217 crores, and PBT is up similarly 32% up to 65 crores. The reason for that is that the IT business in Q1 of last year had revenue of 73 crores, an operating profit of 10 crores, and an exceptional income of 35 crores.
Okay, and if you can tell us, why have your margins contracted? Operationally, will we continue to see flat margins?
Sure. So if you look at segment 1, you'll see a small dip in margins down to 1.5%. That is, although order inflow has been quite strong in our projects business, and margins have also, booking margins have been good. We've been struggling to execute projects because cash flow in the market has been limited. Because of that, we're seeing delays in projects. On account of that, we've decided to be prudent about the revenue recognition and the margin accretion in these projects. Once we see execution pick up, which we expect should be in Q3, Q4 of this year, you'll see a regularization of those margins. So segment 1 margins for the full year FY17 will improve substantially over Q1. As far as our segment 2 is concerned, which is our unitary products, room air conditioners and commercial refrigeration, you'll see margins holding to about 10.8%. That business, both revenue as well as profit, has been strong, and we're quite optimistic for this year.
And take us through the revenue breakup in terms of each of your segments. How has your EMP segment performed, and which sector is going to drive growth?
Sure. So as far as revenue growth, both segment 1 and segment 2 have grown well. Segment 1 is up about 25%. I did mention to you that operating margins there in Q1 have been under pressure, but I expect that operating margin will improve right from Q2 through Q4, and we expect a better overall year as compared to last year. The only issue there, as I'd mentioned, is execution of projects. Once cash flow improves in the market, we should be able to accelerate that well ahead of 25%. Coming to our unitary products business, it's been largely driven by our room air conditioner business. That room AC business grew 37% as compared to the market, which grew at about 28%. So we've grown about 10% ahead of the market. It was a very hot summer. It's been a wonderful quarter for that business, and fortunately now with the rains coming in and living up to expectations, we're expecting the festival season that will follow should also be strong. So at an overall level, for the segment 2 for the year, it should be much stronger than last year. Coming to our segment 3, which is the smallest business, our electronics business, that's had a tough quarter, largely driven by capital expenditure being low in basic industry. Maybe that will take another year and a half to improve. So probably segment 3 is still some way away from recovery.
Okay, and in terms of your market share, if you can tell us what is it and what do you expect it to go to? That's the question number 1. And could you give us some guidance in terms of revenues for the coming fiscal?
Sure. So as far as market share is concerned, really the room air conditioner market share is what is relevant here. We closed March 16 with a market share of 10%. In Q1 of this year, because we've grown faster than the market, we estimate our market share to be at 10.6%, so a small improvement in market share. We should be able to sustain that for the full year. We're aiming to do about 11% market share in room air conditioners. As far as guidance is concerned, we don't usually give guidance. However, if I look at 29% growth in revenue and 32% growth in profit in Q1 on a like-to-like basis, we expect this momentum to continue through the year. And so it looks like a good year for us.
Now, we understand that you plan to invest something like 30 crores on new product development as well as research and design initiatives. What's the update?
So actually our investment in R&D product development is a lot larger than 30 crores. We have a state-of-the-art setup here in just outside Mumbai, which we are further investing in. In our industry there are a few drivers. There's climate change, there is refrigerants changing, there is energy efficiency requirements that keep getting pushed up. We are actually a leader when it comes to energy efficiency. For example, in our room air conditioner business, we have the largest range of inverter air conditioners in the market today, because we see a clear trend of buyers moving to high energy efficiency products. When you take a platform of energy efficiency, as we have across all our product range, right from a window unit up to a large central plant chiller, that does lead to a heavy investment in R&D. Our R&D investment is approximately 1.7% of revenue, and over a 3-year period we will probably increase that to as high as 2.5% of revenue on a forward basis.
Okay, Mr. Advani, we'll let you go on that. Thank you very much for taking time out and sharing your business outlook with us on Hot Stocks.
Thank you.
Well, that's the management of Blue Star, and the stock clearly is at the day's low as we speak, 2.5% down. Move on then and get you some individual trading recommendations from Pritesh.